Okay, so today's a weird one because these two trades didn't look related on paper at all. Different markets, different directions, taking almost an hour apart. But by the end of the session, I realized they got hit by the exact same thing. Euro USD long, gold short, $15,000 gone combined. Let me show you both because the connection between them is honestly the whole point. So I started off the day on Euro USD, same process as always. 4-hour range was marked. New York time, first candle fully closed. On the 5-minute chart, price broke below the range low. Candle closed completely underneath it. That was a clean move. And then the next candle closed back inside the range, which gives me a long signal. My MACD was positive, lined up with the setup. My entry went on the close right here, stop at the low of the breakout, target at 2 hours as always. Nothing was unusual about any of this. This was completely standard, the kind of trade I take dozens of times a week. Price moved up a little bit after my entry, and then out of nowhere, a headline crossed the wires. Some overseas tension flaring up. The details barely mattered in the moment, but what mattered was every trading desk on the planet reacted to it all at once. The dollar just ripped higher and higher in a straight line. It basically fell off a cliff. My stop got taken out in about 90 seconds flat, way faster than any normal move I've ever seen on this pair. So that was a $6,200 loss. I figured, all right, that one wasn't really about my setup. That was a reaction to some news. So I closed it. I took a breath, moved on to check gold, which had been setting on my monitor whole morning. I usually put a few options on different monitors to monitor them during the day. So as you can see, gold's 4-hour range was marked. Price pushed above the range high. Candle closed outside. Next candle closed back inside the range. That's a short signal. My MACD was negative. Everything was lined up. Every box was checked. Exactly like the Euro USD trade an hour earlier. So I took it. My entry went on the close. Stop at the high of the breakout right here. Target at 2 hour. Totally standard process. In my head, this was going to do its own thing. Nothing to do with whatever happened on Euro USD, except it was the exact same thing. That headline from earlier that sent the dollar spiking, it didn't just strengthen the dollar, it sent everyone running for safety. Traders were looking for a safety net this morning. And gold on a normal day moves opposite to the dollar. Dollar up, gold down. That's the textbook relationship. But this wasn't a normal day. This was a real moment of panic in the market. And in general, money doesn't flow into just one safe haven. It floods into all of them at once. Dollar and gold both got bought aggressively at the same time, which almost never happens together. So it ripped straight through my stop harder and faster than Euro USD. For a second, I genuinely couldn't figure out why a dollar strength headline was sending gold higher instead of lower, until it clicked that the headline wasn't really a dollar story. It was a story of fear. And fear doesn't care about the unusual relationship between markets. So that was a $9,700 loss. Two trades, two totally different markets, one single cause. So here's what I actually took from today. I walked into that gold trade thinking it had nothing to do with the Euro USD trade I lost on earlier. It was a different chart, a different asset, felt completely unrelated, but the setups weren't really the problem on either one. The problem was I never stopped to ask what was actually driving the market broadly before taking either trade. So that's a lesson. You never want to ignore volatility. Volatility tweaks your setup. It decreases the probability of your setup. Most of the time, gold and the dollar move opposite to each other, and that's genuinely useful to know. But it's not like it's a law in physics. In a real panic situation, correlations that you've learned to rely on maybe for years can stop working for an hour because everyone's suddenly making the same decision for the same reason at the same time. Two trades on two totally unrelated markets aren't actually diversified if they're both quietly being driven by the same underlying emotion. Today, that emotion was fear, so it completely messes up how the correlation between things. I'm not saying obsess over news and trade less. I'm saying when something moves faster and doesn't quite make sense, it's worth asking whether it's really about your setup or about something much bigger happening underneath it. By the way, the platform that I use is called Exness. They allow you to start trading with just $10 so you can test out your strategy and maybe even try out a new strategy. And the good thing is you don't have to risk much money. You can start trading with as little as $10. The link will be down below in the description and in the pinned comment, so you can check that out if you're interested. Also, don't forget to subscribe and like this video, and I'll see you in the next one.